Jim Rickards is explaining this week inflation, interest rates, cryptocurrencies, stocks, bonds, currencies, China, and Russia in his Rickards Uncensored podcast, where he gives his real-time updates and exclusive insights into his latest analysis and predictions with high-level calls broadcast live every Friday morning. Firstly, inflation. He explains why inflation is not transitory, but rather persistent and accelerating. He cites the data from the U.S. Bureau of Labor Statistics, which shows that the Consumer Price Index, CPI, rose by 5.4% year-over-year in September 2023, the highest rate since 2008. He also points out that the CPI understates the true inflation rate, as it excludes many items that are essential for consumers, such as food, energy, housing, and healthcare. He estimates that the real inflation rate is closer to 10% or higher. He warns that inflation will erode the purchasing power of the dollar and reduce the real value of wages, savings, and investments. He also predicts that inflation will lead to higher interest rates, lower economic growth, and social unrest. Interest rates. He advises why you should avoid long-term bonds, as they are vulnerable to rising interest rates and inflation. He notes that the yield on the 10-year U.S. Treasury bond has increased from 1.3% in July 2022 to 2.7% in October 2023, reflecting the market's expectation of higher inflation and tighter monetary policy. He also expects that the Federal Reserve will raise its benchmark interest rate from near 0 to 0.5% by the end of 2023 and to 1.5% by the end of 2024. He argues that higher interest rates will increase the cost of borrowing for consumers, businesses, and governments and will negatively affect the stock market, the housing market, and the debt market. Cryptocurrencies. He reveals why you should avoid cryptocurrencies, as they are vulnerable to hacking, regulation, and manipulation. He cites several examples of cyberattacks on cryptocurrency exchanges and platforms, such as the $600 million theft from Poly Network in August 2022 and the $150 million hack of KuCoin in September 2022. He also mentions the regulatory crackdowns on cryptocurrencies by various governments, such as China's ban on crypto mining and trading in September 2022 and India's proposed bill to outlaw private cryptocurrencies in October 2023. He also exposes the manipulation of cryptocurrencies by insiders, whales, and bots who use techniques such as pump-and-dump schemes, spoofing, wash trading, and front-running to influence the prices and volumes of cryptocurrencies. China. He reveals why China is not a threat to the U.S., but rather a paper tiger that is facing internal problems and external pressures. He analyzes the challenges that China is facing, such as a slowing economy, a debt crisis, a demographic decline, a social unrest, a corruption scandal, an environmental disaster, and a military confrontation. He also discusses the actions that the U.S. is taking to counter China's rise, such as forming alliances with Japan, Australia, India, and Taiwan, imposing tariffs and sanctions on Chinese goods and entities, supporting human rights and democracy in Hong Kong and Xinjiang, and enhancing its military presence and capabilities in the Indo-Pacific region. Russia. He explains why Russia is a more formidable adversary than China for the U.S., as it has a stronger economy, a more stable society, a more effective leader, a more advanced military, and a more strategic location. He also explores the motives and goals of Russia's President Vladimir Putin, who he describes as a master chess player who knows how to exploit his opponent's weaknesses and advance his interests. He also examines the areas of conflict and cooperation between Russia and the U.S., such as energy security, cyber warfare, nuclear weapons, Syria, Ukraine, Iran, and North Korea. In his Strategic Intelligence newsletter, Jim offers a compelling analysis of the global economy, cautioning that it is on a trajectory toward a severe crisis, potentially surpassing the magnitude of the 2008 financial meltdown. He contends that the global financial system rests upon a fragile nexus of debt, derivatives, and fiat currencies, rendering it susceptible to unforeseen shocks and contagion. Furthermore, he unveils his latest recommendations to shield and augment one's wealth in light of this impending crisis. Jim advises diversifying portfolios with assets such as gold, silver, foreign currencies, and alternative investments not reliant on the U.S. dollar. Jim also delves into the realm of geopolitics, scrutinizing recent events, including Iran and its proxies' attacks on Israel, elucidating their implications for the region and the world. He engages in a discourse about the prospects of a conflict between Israel and Iran and its potential ramifications on oil prices, stock markets, and the value of gold. He asserts that a war between these two nations is an inevitable outcome, driven by Iran's pursuit of nuclear armament and Israel's unwavering resolve to prevent it. Jim prognosticates that such a conflict would engender a surge in oil prices, a stock market downturn, and a gold price upswing. In his Insights and Strategies newsletter, Jim generously shares his time-tested approaches for identifying optimal investment opportunities across various market conditions. He provides specific recommendations encompassing stocks, bonds, commodities, currencies, and other assets that he believes will outperform in the coming months and years. Jim articulates the reasoning behind advocating investments in undervalued sectors like energy, materials, and industrials, highlighting their potential to benefit from the global economic recovery, the surge in inflation, and the heightened demand for infrastructure development. He also endorses a selection of his favored stocks that exhibit strong fundamentals, appealing valuations, and significant growth potential, including Chevron, CVX, Freeport-McMoRan, FCX, Caterpillar, CAT, Honeywell, HON, and Lockheed Martin, LMT. Furthermore, Jim provides a word of caution against long-term bond investments, citing their vulnerability to rising interest rates and inflation. He underscores the substantial increase in the yield of the 10-year U.S. Treasury bond, climbing from 1.3% in July 2022 to 2.7% in October 2023, reflecting market expectations of heightened inflation and a more stringent monetary policy. He further anticipates the Federal Reserve's plan to incrementally raise its benchmark interest rate, reaching 0.5% by the close of 2023 and 1.5% by the conclusion of 2024. Jim argues that these elevated interest rates are poised to inflate borrowing costs for consumers, businesses, and governments, potentially having adverse effects on the bond market. Jim also underscores the importance of diversifying investment portfolios with commodities such as gold, silver, oil, copper, and agricultural products. He emphasizes that these commodities serve as reliable hedges against inflation, currency devaluation, and geopolitical risks. Moreover, Jim forecasts the forthcoming commodities supercycle underpinned by supply constraints, burgeoning demand, and sustainability initiatives. He also offers insights into prudent avenues for investing in commodities, ranging from exchange-traded funds, ETFs, and futures contracts to options contracts and physical delivery. Finally, Jim advises diversifying portfolios with foreign currencies, including the euro, yen, yuan, and Swiss franc, as he anticipates their appreciation relative to the U.S. dollar over the long term. He argues that the U.S. dollar status as a reserve currency is waning, owing to China's ascent, the proliferation of digital currencies, and the decline of U.S. economic and military influence. He also sounds a cautionary note, warning that a sudden collapse of the U.S. dollar is conceivable if there is a loss of confidence in its value or a geopolitical upheaval. Jim offers his guidance against long-term bond investments, citing their susceptibility to rising interest rates and inflation. He points out the considerable increase in the yield of the 10-year U.S. Treasury bond, soaring from 1.3% in July 2022 to 2.7% by October 2023, which reflects market expectations of heightened inflation and a tighter monetary policy. Furthermore, he anticipates the Federal Reserve's gradual progression in raising its benchmark interest rate, ascending to 0.5% by the close of 2023 and 1.5% by the conclusion of 2024. Jim argues that such elevated interest rates are poised to augment borrowing costs for consumers, businesses, and governments while adversely affecting the bond market. Furthermore, Jim underscores the significance of diversifying investment portfolios with commodities such as gold, silver, oil, copper, and agricultural products. He emphasizes that these commodities serve as reliable hedges against inflation, currency devaluation, and geopolitical risks. Moreover, Jim forecasts a forthcoming commodities supercycle underpinned by constraints in supply, burgeoning demand, and environmental sustainability initiatives. He also offers insights into prudent avenues for investing in commodities, ranging from exchange-traded funds, ETFs, and futures contracts to options contracts and physical delivery. Lastly, Jim recommends diversification with foreign currencies, encompassing the euro, yen, yuan, and Swiss franc, as he foresees their appreciation relative to the U.S. dollar over the long term. He argues that the U.S. dollar's standing as a reserve currency is waning, owing to the ascent of China, the proliferation of digital currencies, and the ebbing of U.S. economic and military influence. Additionally, he sounds a cautionary note, warning that a sudden collapse of the U.S. dollar is conceivable in the event of a loss of faith in its value or a geopolitical upheaval. In conclusion, Jim Rickards provides a comprehensive and insightful analysis of the current global economic landscape, offering valuable guidance and recommendations for investors. His real-time updates, exclusive insights, and expert predictions in his Rickards Uncensored podcast and newsletters shed light on critical factors such as inflation, interest rates, cryptocurrencies, stocks, bonds, currencies, and geopolitical geopolitical tensions. As we navigate the complex and ever-changing financial world, Jim's advice to diversify portfolios with assets like precious metals, foreign currencies, and commodities, while being cautious about long-term bond investments, can help safeguard and potentially enhance your wealth. He emphasizes the importance of staying informed and prepared for potential economic challenges ahead. Thank you for watching, and we hope you found this summary of Jim Rickards' insights valuable. Stay informed, stay diversified, and make informed financial decisions as we move forward in an increasingly dynamic global economy.